Looking on the daily basis, we can see that Bitcoin has been on a little bit of a rally. It's starting to show a degree of weakness. Retracements are very normal, and we could even come down to 66, and that would be absolutely okay. But what caused this particular retracement inside crypto? Financial markets are full of different rules, and if we know them, we can take advantage of them. We can see that looking back in time, we saw that Bitcoin rallied up and then it retraced. Why did this retracement occur? Because we know that Bitcoin and therefore the entire crypto market cannot escape the stock market's gravity. So looking at the S&P 500, we saw it just come down. What about the Nasdaq? It saw a degree of strength in here, so this is quite interesting. And notice how Bitcoin and the total crypto market cap is lagging at the current time. The Dow following quite well, and the Russell 2000, you can see it's weak. We basically look at the Russell 2000 as a really good indicator of where crypto is going, and vice versa. There's been a degree of normalization inside the markets. As the DXY went up, that wasn't well received by crypto. And the DXY, the inversion of the DXY typically comes out on the Euro dollar, the Aussie dollar, the Kiwi dollar, and the Great British Pound versus the US dollar. So that's why it's really good to look at your Forex pairs. When everything is going correctly, there's no worries inside the market or inside life. It's when you get pullbacks that you need to look for your internal support structures, and Bitcoin is no different. When we look at the indicator, we need to see what is happening, where did it sell off, and why. We can see that 68,200 mark. That was a level of support that held for a while. And we just didn't manage to get above the 69,800. So the bears won. But what gave the bears the momentum downwards was clearly the indices in the stock market. But the bears can't override positive or negative structural support. So what are we seeing here? We're seeing lots and lots of structural support playing out just around Bitcoin's price. Now, what we need to do is to understand how total crypto market cap is doing. We remember that there was a little bit of a rally inside the main markets and then a dump. Now, what are we seeing? Just a very similar thing. Let's have a look at the structure underneath total crypto market cap. It's vitally important that you look at not only Bitcoin and also total, but also your money chart, just to make it really interesting. Now, what did we see here? We actually got above that $2.329 trillion mark, but because of weakness in the major indices, it pushed it down. We had a negative CTKS gap, which simply meant that it could come up quickly and go down quickly. And boy, oh boy, did it go down quickly. But structure is king and queen across every single price chart. So you must know where the structure resides. And we saw that we had a ton of structure from that $2.274 trillion up to the $2.28 trillion mark. Now, what does this mean to us? It means that we came down and found support and safety nets. Lots and lots of buyers were stepping in here. The CTKS method is literally the world's most powerful smart money and buy-sell level detection system. We know where the structure is before it occurs. We can look to the right with these lines and predict what could happen to price, where the buyers and sellers will interact. Drawing support and resistance lines across recent price action is not structurally effective because you're making up a story. For example, you're drawing support and resistance lines when the price is here is a different view from when the prices are here. You need a structured and systematic way of understanding where the structure actually is in the first place, and it's not supposed to move around, at least inside the month. Now, what do we see here? The bears will be favoring a movement back to the 2.229 trillion. Just remember this particular price area on the chart before that spike up and the spike down. That's what you want to look for on your money charts. What about the bulls? They're going to expect to take out this 2.33 trillion and make their way higher. Please let me know in the comments which way do you think it will go today, or at least in the next 24 hours. I'll give you a bit of an insight how to apply that particular chart pattern. Remember that you were looking for that spike and retracement. Where's that spike and retracement? Around 65,400. Now what we need to do is to overlay the structure, especially of Bitcoin. Now what do we see here? We've got structural support just south of the 66,200 level. So if we start to lose all this structure, we at least have a structural support in there. We've also got one slightly lower around the 65,300 mark. So even if the bears get their way, that's not going to have an easy time to get through that. That's relatively strong. Just for the sake of things, you can just say it's around the $66,000 mark. But just look to this particular structure. We could actually go a little bit lower down to around that 65,500. Now always consider, yesterday we were looking at a really bullish case scenario and things did look good until the major market indices weakened. That's why I said you must look at your charts. Now, right now, because we've had negative price momentum, people will be expecting it to go down. Remember, yesterday, positive price momentum, expecting upwards. Today, negative price momentum, expecting downwards. But what actually happened? It didn't keep on going. It just came down, just miffed around for a little while, pretended to go up, and then came down. What could we see here? We could see a flattening out, we could see a continuation, we could see a reversal. Now, how do you actually deal with this uncertainty? You just look at the structural levels, at certainly inside Bitcoin, inside total, and inside your money chart. But Ken, I just want a simple answer. I want to know if it's going up to the moon or if it's coming down to zero. You don't want to hold either of those extreme positions. You know it's all structurally based. What happened also inside the crypto market? The entire crypto market came into structural resistance, and with the weakening of the major indices, it just pulled it down to an area of structure. It's that simple. Forget about the permanent bears, forget about the permanent bulls, don't worry about the news, because this is real-time news. If you want the real-time news, you look at structure. Hey, why did it come down from here? Structure. Why did it rebound from here? Structure. And that's the secret word for today, structure. And well done to everybody who saw into the future yesterday. By going across to ctksmethod.org and just scrolling down the page, you can see the cheat sheet. Now, the cheat sheet is what you want to focus on because it will help you so much, and it's incredibly pricey. Yeah, it's free, but it is so incredibly valuable. When looking at row 1, if we see continued strength, we understand and appreciate that crypto and also the stock market could be coming down. As the yield strengthened, that was not good for anything, and the DXY strengthening wasn't good either. Even though we got a bit of a retracement in the VIX, you can see how sometimes the market is controlled by the VIX, sometimes it's controlled by the DXY, and sometimes it's controlled by yields. This is why we look at all of them inside row 1 of the cheat sheet. Remember, real-time news comes from the charts, and all the financial press does is to report on chart movements, which come through price changes. Go to the source. Uncover the source of the financial writers' analysis. Just go to the chart. And what do we see? With a strong DXY and strong yields, we expect the US economy to be doing pretty well. But that is throwing negative pressure and momentum on the stock market. If this continues, if we continue to see yields come up, not just from the 10, but also the 2 and the DXY to come up as reflected by dollar yen, we can expect crypto to keep on going down and also the stock market to be hit. Please be aware. And also, don't forget, keep your eye on the VIX, which did spike up just a little as well. With the yields coming up, what does that do to gold? You got it. It sells it down. What about silver? Of course. Copper is a bit of an industrial issue, but we saw weakness inside copper, so that could point to something. We can also see the junk bonds. Like I said, and have been saying for many, many years, please keep your eye on junk bonds. It's a really good indicator. We're also starting to see alignment back with the euro dollar and the Aussie dollar. This is good because the markets are realigning. About time. Now, what does this mean? If we continue to see weakness in junk bonds, weakness in the euro dollar, weakness in the Aussie dollar, weakness in gold, weakness in silver, and weakness in copper, that could just potentially mean, and stacking probabilities, that Bitcoin, that blue line, and the entirety of the crypto space is coming down. Stacking probabilities is an absolute game changer. If you see the euro dollar continuing to be weak throughout the day and selling down, or you see it continuing to recover, recovery means risk on for Bitcoin and crypto and the stock market. What does it mean if it starts to or continues to sell down? That means weakness inside the crypto market, inside the stock market, inside global indices. Please bear in mind what these different charts mean. When the charts tell you the news in real time, they're telling you so many stories, but you have to be able and capable and skillful enough to decipher it. That's what we do each and every day. People who are only inside one particular market will think that their market is moving all markets. It's not the case. When we look at row 3, which are the major market indices, such as the S&P 500, the Nasdaq, the Russell, and the Dow, what have we seen over the past couple of days? That big rally, but look at what happened. It came down and then it recovered. Now, what is this saying to us? If you're only looking at the blue line, if you're only in the crypto space and you're looking at your favorite token and watching the headline news for your favorite random token or not so random token, what does it mean? You're missing out on the bigger picture. What does that mean? You don't know where the market is going. Why do you need to know where the market is going? Because if the market starts to sell down, what does it mean? You need to know what it's doing ahead of time. So often, people just look at the news inside the market that they're in. For example, gold traders will only look at gold news or commodity news. Stock market traders, only their favorite stocks. After all, they're only putting their money into a couple of charts. So, hey, just look at those charts. Or inside the crypto space, they'll just simply look at crypto news and think that is somehow meaningful. It is meaningful to a degree, but not that great a degree. What's really significant are the charts. They give you the real-time news. So which one of these charts would I specifically pay most attention to? It would be the Russell 2000. You can see this weakness. It is continuing. And then I would zoom into the Russell 2000 futures. You can see that's got a little bit of a cut under here, just at the current time. Bitcoin and crypto is not realistically responding to that just right now. But keeping your eye on the Russell is a really good idea. Do they always follow suit? Not always. And this is the thing that you need to bear in mind. It won't give you a perfect signal, but it will allow you to stack probabilities. Inside row 4, we look at individual stocks that comprise those indices. These particular stocks are very important to the stock market. And what did we see? As the stock market surged up, well, Bitcoin and crypto surged up, that blue line. Now it's retracing. Now it's starting to decide, I think I've had enough of this. I might start to go up. Now that's a pretty good thing, pretty good sign to see. And look at Microsoft, it's been doing really well, as has Nvidia. So when you look at row 4, row 3 showed you that the Russell 2000 was a little bit weak, but looking into the individual stocks, it's looking a lot better. Of course, if you're inside crypto, row 5, which is all the cryptos, the major cryptos, that is a very important row to keep your eye on. If you're inside the stock market and you're just investing in, for example, Tesla, and you're not looking at the major market indices such as the Dow, the Russell, the Nasdaq, the S&P 500, you're making a huge mistake. It's exactly the same inside crypto. If you're looking at your money chart and not looking at the big players, you're in trouble. Don't do that. You must look at the big players. What are the big players? Total crypto market cap is one. And also, Bitcoin is the most important chart that you need to look at. But you need to look at Bitcoin and total crypto market cap in conjunction before you apply it to any money chart. Now, what do we see here? We're coming into a level of resistance and we're seeking, very short term, we're seeking to break out of it at the current time. Doesn't look too bad. It actually looks, and when you compare it to the individual stocks, they're also looking good. So the markets may be set for a little bit of a bounce or, in fact, a turnaround. And we know that structural support on total was extreme in this area. So what did that mean? We'd expect a bounce. But Ken, this is also complicated. I just want a simple answer. Is it going up or is it going down? You mean, is it going down or is it going up? It does both things in the span of 24 hours. You're in a very professional market. You've got professional people who know how all these charts intercorrelate and interconnect. It would be like picking up a tennis racket after sitting and watching the tennis grand slams and saying, oh, I'm going to go play the number one. Good luck. Especially if you've never played tennis before. Inside financial markets, you've just got to hit the ball with the racket. Now, how do you do that? How do you do your practice? Well, you just look at the different tiered charts, different rows. It will give you an incredible insight. Now, what do we see? Just playing through here, Ethereum Classic looks like it wants to recover. BNB, which measures activity on centralized exchanges, is actually already recovering. We're seeing some interest from buyers at the current time. Now, if this continues, is a structural issue. That's why you need to look at total crypto market cap and also Bitcoin in conjunction with the chart that you put money into. Why can't it be simple? Because it's not simple, and it never was. And if you listen to people who say, oh, I can guarantee, absolutely guarantee where things are going, well, that would mean, well, they're in fantasy, because it's not the way that markets work. Markets simply rebound from structural level to structural level en masse across all of the different charts. You just have to focus on your structure. When looking at row 7, we can see that ADA, Cardano, is starting to recover. And look at Solana. Solana has always been really strong. This is pointing the way for a crypto. It could be a reversal or it could be a recovery. Let's just see how it plays out. Don't get too wed to any particular idea because price is moving in a wave. It's always going up and then coming down and going up and coming down. That's how it works. From row 7, we can see, especially looking at Solana, there's a potential for a recovery, either a small rally or a larger rally. Just keep your eyes on the charts. I would urge you to keep an eye on the DXY and the Forex pairs today. I think it's a particularly important focus for you. For example, we're seeing crypto come up and a degree of weakness inside the DXY, which is translating into short-term or medium-term strength for the euro dollar. And remember, these invert themselves. That's why all of these are going in one direction and all of these are going in the opposite direction. You want to group. Let's check out quickly the sectors. Atom, JUP, and Solana are coming up upper bank. We're now starting to see Tron just leaving the pack. Be aware of what this means. Tron tends to shine in the darkness. And what is lower bank? WIF and TIA. Market makers just have a ball with retail traders and investors. They simply push it up to fade it and they pull it down to rally it. So please be aware of these things. When we look at the ETH ecosystem, AXL and Jasmy are doing really well, upper bank. RWA, and Link are just crushing it. And in gaming, we saw that Ape was just aping away, but now it's started to come back to the pack. No alt can escape Bitcoin's gravity. Axie just a little bit below it. Solana, Radium, and Helium are doing very well. Inside the service, XRP has been the greatest gainer, followed by BNB, which is a negative. Litecoin and Bitcoin Cash are on the bottom. What is this telling you? Telling you weakness inside Bitcoin will be flowing through to weakness inside the crypto market. What about the memes? Well, they've been hit. Distributed computing and file storage. Hot is not so hot. It was really hot yesterday, not so hot today. And this is the way the markets move. Just because they're going up doesn't mean they're going to stay there. We don't say BORSOG for no reason. What is BORSOG? Buy on red, sell on green. Looking at the wallet ecosystem, Safe is just going for it. What about DeFi? Ray is up in front. When it comes to DPIN, hot is still hot, but sometimes not. Let's look at Binance Labs. CTK doing fairly well. Just remember these pumps can often get followed by dumps. So what you want to do is to try to predict where they could flatten out and go for it if you're trading in this style and manner. Personally, I just like to trade the structural levels, but I put this in because a lot of people like it. What about centralized exchanges? Woo is doing pretty nicely, but don't forget it was up around 24% and it's down around 12%. So just think about up to back one. All right, so DEXs, decentralized exchanges, DYDX and Perp and Radium and Woo are doing quite nicely. DEXs tend to shine when the centralized exchanges come down, so bear that one in mind. Bitcoin ecosystem, remember inside the service Bitcoin Cash and Litecoin were the greatest losers. That points towards weakness inside the Bitcoin ecosystem. It's really good to look at the structural levels inside the service. We can also see the layer 2s are coming down at the moment. So the DEXs have the focus of investor attention at the current time, and likely wallets will have the same. So just be aware when the centralized exchanges come down, the DEXs tend to go up. But also remember that if the DXY starts to lose power, it's going to push power into the euro dollar, and that will in turn push power into the major market, stock market futures, and therefore crypto, which will reverse all of this. But Ken, I just want certainty. Stop saying up and down. What you need is a strategy and a system to profit from uncertainty. The markets are always uncertain. We've had a retracement down to this particular level, and we just said, yeah, that's on the cards. That's part and parcel of price moving in a wave. We could come down even further. If we don't see a retracement and a recovery and taking out the 69,000, we would expect more retracements to be afoot. So even if we get a bit of a wick like this, it doesn't mean the selling is over. It means that we need to stack probabilities, because as price comes up, it is natural for it to retrace. But you don't want to be called in at the top like a lot of retail are. They only come in on the green and they flee when there's a couple of days of red, pretty much around the bottoms. So if ever you've bought around the top and sold around the bottom, you absolutely understand that you must think in terms of waves, not in terms of solid. It must go up, it must go down. There's going to be plenty of influencers out there who will tell you with absolute chronic certainty that the market will go to this level, but it won't. What you need to understand is that the price and wavy nature of all financial markets is the same. It comes up, it goes down. It comes up, it goes down. It comes up, it goes down. That's as simple as it gets. You want to take advantage of these up and down price movements. A lot of people say, oh, Ken, I'm only interested when the market goes up because somehow I'm making money. The financial markets are the only markets in the world where people will pay $1.20 for something that's worth $1. Please don't do that. You want to get really, really excited when you see red. I sure as hell do. When the red comes in, I'm loving it. I want the red. I want the retracements. And hopefully you will too. I would just suggest that you look at the DXY and the euro dollar today and just also look at the major stock market futures. They will give you a really good idea as to where the wave of price is going right across the markets, not just crypto. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.